Welcome back to Strategic Leadership in the AI Era. I'm your host, and this is episode 19, the AI-Ready CFO, how finance leaders are becoming technology strategists. I want to open with two numbers that, when you put them side by side, tell you almost everything about the moment we're living through. Number one, according to Deloitte's most recent CFO survey, 87% of chief financial officers say artificial intelligence will be extremely or very important to their finance operations in 2026. Only 2% say it won't matter. The enthusiasm at the top of the finance function is nearly universal. Now here's number two. According to a rigorous 2025 study out of MIT, roughly 95% of enterprise generative AI pilots are delivering no measurable business return. 95%. Companies have poured tens of billions of dollars into these initiatives, and the vast majority are producing nothing you can point to on a financial statement. Sit with that gap. 98% of CFOs say AI matters, and 95% of AI pilots are failing to pay off. That enormous space between promise and payoff, that is the new frontier of the finance function. And the person standing in the middle of it, deciding which AI investments live and which ones die, is the CFO. For most of corporate history, the CFO was the person looking backward, closing the books, reporting what already happened, guarding the numbers. Today, that role is being rewritten in real time. The modern CFO is becoming a forward-looking technology strategist, one of the most influential voices in the entire company's AI journey. That transformation is what today's episode is all about. Let's get into it. Let's start by mapping just how fast this shift is happening, because the adoption curve in finance has been dramatic. According to Gartner, the share of finance leaders using AI in the finance function jumped from 37% in 2023 to 58% in 2024 to 59% in 2025. Now, notice something in those numbers. There was an explosion between 2023 and 2024, and then it essentially plateaued. That plateau is important, and we'll come back to it, because it's the sound of the easy wins running out and the hard work beginning. But the intent at the top is unambiguous. That Deloitte survey I mentioned found that 54% of CFOs now name integrating AI agents into finance as a core transformation priority, and half of them rank the digital transformation of finance as their number one priority for the year ahead. And the trajectory is only accelerating. Gartner has predicted that 90% of finance functions will deploy at least one AI-enabled technology solution by 2026. 9 out of 10. So what are they actually using it for right now? According to Gartner, the top deployed use cases in finance are knowledge management at 49%, followed by accounts payable automation at 37%, and error and anomaly detection at 34%. In other words, finance teams are starting where the return is clearest, automating the grind, catching the mistakes, and putting institutional knowledge at everyone's fingertips. That's the foundation. But the truly strategic transformation is happening in three deeper areas: planning, protection, and investment. Let's take them one at a time. The first great transformation is in financial planning and analysis, what finance people call FP&A. And to understand why AI matters here, you have to understand how broken the old way was. For decades, financial planning meant spreadsheets. Enormous, fragile, manually updated spreadsheets. And here's the dirty secret of the profession. According to industry surveys, FP&A professionals spend around 46% of their time just cleaning data and updating spreadsheets. Not analyzing, not advising, just wrangling numbers into cells. Nearly half their working lives spent on janitorial work instead of judgment. And the forecasts those spreadsheets produced, they were static. You'd build a budget in the fourth quarter, and by the second quarter of the next year, reality had already wandered miles away from the plan. It was like trying to navigate a moving car with a photograph of the road taken last year. AI changes the entire paradigm. Instead of a static annual model, AI-powered planning tools produce dynamic, continuously updated forecasts that adapt to real-time market conditions. And the strategic upside is enormous. Gartner predicts that by 2029, 40% of FP&A teams at large enterprises will use AI-enabled simulation tools to replace bottom-up manual planning. And that's up from just around 5% today. That's an 8-fold increase in 5 years. The efficiency gains show up in the close, too. Gartner projects that by 2028, finance organizations using cloud ERP with embedded AI assistance will achieve a 30% faster financial close. Imagine handing your board an accurate picture of the business a full week sooner every single period. Here's the deeper point. When AI takes over the data wrangling, the finance professional is freed to do the thing only a human can do. Interpret, question, advise, and steer. The forecast stops being a document you produce once a year and becomes a living conversation you have with the business every single day. The second great transformation is in protection, audit, controls, and fraud detection. And this one has become an all-out arms race. Let me set the stage with the scale of the threat. According to NASDAQ Verafin's 2026 Global Financial Crime Report, an estimated $4.4 trillion in illicit funds flowed through the global financial system in 2025. Trillion with a T. And here's the part that should concern every finance leader. 90% of financial crime professionals report that AI-driven attacks on their institution have increased over the past 2 years. The criminals got the same technology you did, and they're using it to supercharge their fraud. The internal threat is just as real. According to the Association of Certified Fraud Examiners, the median loss per occupational fraud case is now $145,000, and organizations lose an estimated 5% of their revenue to fraud every year. This is why AI in the finance function isn't optional anymore. When your adversary is using machines, you have to defend with machines. And the defense is genuinely powerful. Machine learning models can scan every transaction, every journal entry, every expense report, not a sample, but all of it, and flag the anomalies that human auditors, checking maybe a fraction of the population, would never see. Consider Mastercard. Using generative AI combined with graph technology, the company reported it doubled its detection rate for compromised cards. And the scale it operates at is almost incomprehensible. Its decision intelligence engine scores around 143 billion transactions a year. No human team on Earth could do that. This is the new reality of financial controls: continuous, comprehensive, and machine speed. For the CFO, this reframes the audit function entirely. It moves from a periodic, backward-looking, sample-based check to a continuous, real-time immune system for the entire enterprise. Now we arrive at what I believe is the most important new role of the modern CFO. Remember that opening paradox. 87% of CFOs say AI is vital, but 95% of AI pilots deliver no measurable return? Somebody has to close that gap. And increasingly, that somebody is the finance chief. The evidence that this gap is real is overwhelming. Beyond that MIT study, Gartner predicted that 30% of generative AI projects would be abandoned after the proof of concept stage by the end of 2025, citing poor data quality, unclear business value, and spiraling costs. Gartner also predicts that more than 40% of agentic AI projects will be canceled by the end of 2027 for the same reasons. And the RAND Corporation has estimated that, historically, over 80% of AI projects fail to reach meaningful production, roughly double the failure rate of ordinary IT projects. Here's a statistic that should make every finance leader sit up straight. Gartner found that 54% of organizations cannot accurately state their total AI spending because the costs are scattered across dozens of budgets. Think about that. More than half of companies don't even know what they're spending on AI. That is not a technology problem. That is a financial governance problem, and it lands squarely on the CFO's desk. This is where the finance leader becomes indispensable. The CFO is uniquely positioned to bring discipline to the AI gold rush, to insist that every initiative have a business case, a measurable outcome, and a clear owner. To kill the science experiments that will never scale, and to double down on the projects that create real value. And the reward for getting this right is substantial. Gartner projects that CFOs who pair strategic AI deployment with broader finance technology investment could add around 10 percentage points of margin growth by 2029. The CFO who masters AI governance doesn't just avoid waste, they unlock one of the biggest value levers in the entire company. So what does all of this mean for the finance professional? The analyst, the controller, the person doing the work. This is where we have to be honest and also optimistic. Let's be honest first. A landmark McKinsey analysis found that with currently demonstrated technology, around 42% of finance activities can be fully automated, and another 19% can be mostly automated. And here's the important caveat. That analysis predates the generative AI era. So if anything, it understates today's potential. Looking forward, Gartner expects that by 2029, AI-driven tools will take over roughly 60% of the custom analysis that finance teams do today. Now, if your identity as a finance professional is built entirely on your ability to build a spreadsheet model or reconcile an account by hand, that is genuinely unsettling news. The spreadsheet jockey, as a role, is being automated. But here's the optimistic truth, and it's the whole thesis of this episode. The work that's being automated is the low-value work. And what's left, what becomes more valuable than ever, is exactly the work that makes finance strategic. Interpreting what the algorithm found, validating the models, asking the questions the machine didn't think to ask, translating data into decisions the business can actually act on. The number cruncher is being retired. The technology strategist is being hired. And very often, it's the same person, just leveled up. You can already see the tools arriving to enable this. SAP is rolling out an autonomous finance suite with dozens of AI assistants coordinating hundreds of specialized agents, including a financial close assistant that automates reconciliations and surfaces bottlenecks, which SAP says can compress a close that takes weeks into days. Microsoft launched Copilot for Finance, embedding generative AI directly into the Excel and Outlook that finance teams already live in, automating reconciliation and variance analysis. The message from every major platform is the same. The AI is coming into your workflow, whether you're ready or not. The professionals who thrive will be the ones who learn to direct it. Let's make this actionable. Number 1, if you lead finance, appoint yourself the AI ROI gatekeeper. Insist that every AI initiative in your organization has a defined business case and a measurable outcome before it gets funded. With 95% of pilots failing to deliver, disciplined capital allocation is the highest value thing you can do. Number 2, get your data house in order first. The number 1 reason AI projects fail is poor data quality. Before you chase a flashy use case, invest in clean, connected, trustworthy financial data. It's not glamorous, but it's the foundation everything else stands on. Number 3, start with a high certainty win. Follow the adoption leaders, anomaly detection, accounts payable automation, faster close. Prove value on something concrete, build organizational confidence, and then expand into dynamic forecasting and beyond. Number 4, reskill your team toward interpretation. Shift your people away from building reports and toward interpreting them. Invest in data and AI literacy across the finance function. The most valuable person on your team 5 years from now is the one who can sit between the algorithm and the boardroom and make sense of both. Number 5, know your total AI spend. If you're in the 54% of organizations that can't state what they spend on AI, fix that this quarter. You cannot govern what you cannot see. That's our look at the transformation of the CFO, from the guardian of the past into the strategist of the future. We opened with a gap, near universal belief in AI and near universal failure to capture its value. And the whole argument of this episode is that closing that gap is the defining work of the modern finance leader. It requires new tools, yes, dynamic forecasting, machine speed fraud detection, autonomous close. But more than that, it requires a new mindset. The willingness to move from counting the value the business created yesterday to helping architect the value it will create tomorrow. Here's your challenge for this week. If you're in finance or you work closely with your CFO, Pick one process, forecasting, compliance, or capital allocation, and start a real conversation about where an AI pilot could deliver a quick, measurable win. And attach a number to it. Define upfront exactly what success would look like on the financial statement. Be the person who brings rigor to the AI conversation. If you found this episode valuable, please share it with the finance leaders, controllers, and analysts in your network who are ready to evolve from number crunchers into technology strategists. Subscribe to Strategic Leadership in the AI Era wherever you get your podcasts, and leave us a review. It helps more leaders find these conversations. Until next time, keep leading strategically, keep asking for the measurable outcome, and keep evolving with the technology. This has been Strategic Leadership in the AI Era. See you in the next episode.